Hi, I'm Paul. Thank you for watching this video. If you love it, please subscribe at the end and share it with somebody. So guys, it's 3 o'clock right now. There's an hour left in the trading session. This is the heat map for the stock market. Look at this sector. Energy is all green right now. It's the only bright spot for today. There's a few stocks here or there. I think Qualcomm is actually the highest S&P gainer today. Guys, the markets are very volatile. At one point today, I think the NASDAQ pre-market was up almost 1%. There's a lot of volatility here. So what does that mean? First off, it can be scary. When you see your money go up and down several percentage points in one day, you're going to be a little scared. I get that. I've been there. I've seen it before. When I had a short in the stock market, so if the stocks are up a lot, I lose a lot of money. But remember, the reason you're watching this video is you want to learn something. That's why everybody uses YouTube. And the more you know, the less you fear. I'm trying to help you guys understand what I understood after a lot of problems years ago. I was in your same position. I didn't understand why these ups and downs happen. And guess what? I still don't. But what I do understand is they will happen and to embrace it. I love days like this. I love red. Red makes me happy. Why? Because I want to buy things that I love at cheaper prices. So if I understand what's going to drive the value of stocks over the long run, I'm going to sit there and buy as they get cheaper and either fall in my price or get deeper into my value territory. Now, is that easy? No, it's not easy. It never will be easy. That's why there are very few Warren Buffetts in the world. That is why there are only a few people who do really, really well with investing. This is why I always tell people, if your next door neighbor's high school kid is telling you what investments to buy, be very cautious. It isn't supposed to be easy. It will never be easy. And that is your goal, because if a few people are able to just control their emotions and understand a few things that drive stocks, you can do very, very well. Now, the NASDAQ is down 30-some% this year. The S&P is down 20-some%. That sucks. Everybody, I'm looking at Market Watch and all these news channels on our website, Everything Money. The news articles come up. We're going to bottom out here. We're going to go up from here. We're going to see a bottom. Nobody has a clue. I always laugh whenever I see people say like, oh, we're going to bottom here. We're going to go up to here. No one has a clue. What I will say though is I make my values on the markets based on 3 long-term averages: the stock market to GDP ratio, which Warren Buffett loves, the 10-year cyclically adjusted PE ratio, and the price to sales ratio. And all 3 metrics, which are the most reliable metrics for long-term value, say the market is currently selling for about double where it should. That the market needs to fall in half. Now you might sit there and say, that's extreme. Is it? The market falling in half is extreme? We have this happen a lot more often than people remember. It happens every so often, and it's okay, because guess what? We still live in the United States of America. We still live in a growing worldwide economy with the United States driving things. And even if we weren't United States and we were England, there's still a lot of growth for everybody out there. You should embrace lower prices, unless, of course, you're on the cusp of retirement. Then it's scary. At which point I would tell you, you shouldn't have exposure to stocks that would adversely affect your retirement. But if you're young, sub 40, oh my Lord, you should love days like this. You should want more days like this. You should want the stock market to fall in half. Why? Because it allows you to buy great stocks at great prices. That is your sole goal. And of course, like usual, I want you to dollar cost average. And if you've watched any of our videos, this is where the stock market value goes over time, but this is how prices go. That's why I want you dollar cost averaging, because you'll never be able to guess the highs and lows of the market. So over time, if you dollar cost average, you'll pay exactly that, and you'll crush all your friends, all these idiot financial planners out there, everybody out there who is a genius in a bull market. You will crush them in the long run. It is proven time and time again that people sell at the worst times and buy at the worst times. They sell when everything's down here and they buy when everything's up here. You're not going to be any different unless you have a different process. And that different process is taught on this channel. We are teaching a different process. Go look at all of our videos over the last 2 years. You will see us talk about how we thought overpriced, and we got beaten up on the internet by people. You don't know what you're doing. You're an idiot. And then every single time we said avoid a stock, pretty much every single time it is now much, much lower than before. And the stocks we have bought that are great values, when they go lower, guess what we do? We reevaluate, and if our thesis is still the same, we buy more shares. We're not afraid of a stock price falling. We embrace the stock price falling. All the other idiots of the world, the Jim Cramers, the Kathy Woods, the Tom Nashes, the Meet Kevins, and the Stock Moes, when stocks fall, they get scared and they bail. If they even keep their videos up, which they take all their videos down when they're wrong, if they actually keep those videos up, you would see they'll sit there and say, this stock is a no-brainer at this price. It falls 50%, they sell it all. If it's a no-brainer at that price and your thesis hasn't changed, why would you ever sell it? Why would you ever sell something when the thesis hasn't changed? So on this channel, I'm imploring you to listen, understand, ask questions. In the comments, you will understand that there's a different way to look at investing that works in the long run. And because of the internet, because of YouTube, we can all get together in a community off our website, everythingmoney.com, and sit there and talk about this like-minded behavior. We've been talking about this for years. Our tune has not changed. Now, does that mean that we're not going to change our views on stock? Absolutely, we'll change our view on stocks. I'm questioning my Carnival Cruise Line decision of years ago. Why? Because they took on way more debt than I expected them to take on. Something fundamentally changed in the company. I expected them to have $20 billion of debt when they finally emerged out of COVID, and they currently have $30 billion in debt. That is a big difference. And that's why my thesis might be changing. So you got to remember that. I change my opinion when the fundamentals have changed adversely. If they don't change, just like stock prices, stocks can go down 30%. People think buying time. I sit there and say maybe some stocks, but not all of them. I have a pocket of stocks that I like. That's it. I can't wait to get to the point, and we will hit this point at some point in the next few years, where everybody's going to be, instead of saying to me, Paul, you hate all stocks, people are going to say, Jesus, Paul, you love all stocks. I'd be like, well, there's a lot of great buys out there. The pendulum has to swing. The pendulum has to go from crazy exuberance to whatever you call this, insane depression or pessimism. We're probably right here right now. From swinging from here to here. Remember, we still have Bitcoin. It still exists at 20,000 a coin. That to me tells me, I was at the bank 2 weeks ago, and the bank teller was telling me how he's loading up on Coinbase, Amazon, not Netflix, and Zoom, and some other ridiculously overpriced stock. And I'm like, okay, we're not anywhere close there yet. I need people like that to give up completely on investing. That's how I know there's a time to get back. And we're not there yet. We're not even close. You see these articles saying, oh man, the market's so pessimistic. No, they're not. You need to see people give up on stocks. And we haven't got anywhere close to that. We haven't got anywhere close to that. I need people to give up on Apple. That will be it. A good friend of mine once said to me, and he's right. When people have given up on Apple, that's when we know we've gotten to complete pessimism. Because Apple is the company. Google is a great company. When people give up on Google, Microsoft, Apple, I'll say, okay, we're getting there. We're probably close, if not there already. But people haven't given up on them yet. And that's what we need to get to. So if this all makes sense to you, and you've listened this far, and you're like, wait a second, this kind of makes sense. I'm not telling you to go dump your portfolio and start from scratch. Go watch more videos. Go learn more. Engage if you can in the community. It's for a couple bucks a day. You can join our community and you'll get access to all of our software that you see in those videos and all the community, and you'll be able to have a conversation. It's a great investment in yourself. Just start engaging this. I didn't change overnight. It took years for me to change. You might sit there and say, oh my God, years. Guess what, guys? It's a lot of fun though. Every single week, every single month, when you learn something new, it is so much fun. I still read every day to learn more new things. It is a ton of fun. And if that's the kind of person you are, join. You're going to love it. Just subscribe to our channel, engage us. And it's a long journey, but the more you know, the less you fear. Guys, check out the next video. It's the coming recession, maybe the opportunity of a lifetime. Thank you very much.